Are we about to see an explosion in volatility? Less than 2 weeks away from the US election being called, we now know that certain areas of the market are acting strangely. And in today's video, we need to take a look at the dark pool activity, the options levels, and of course the huge squeezes and moves going on. With Tesla breaking out to a serious level and creating a gamma squeeze, there are a lot of discussions about what's next for that stock. But what might be most important is actually what's happening on the major markets. With the rejection into the close for the Nasdaq and the S&P 500 coming off the level that we expected, the Bullish percent index is starting to show one of the worst reads in quite a long time. And the last 10 times we saw this happen, 9 of them were bearish. So what's really going on in the world of volatility and markets for the week ahead? We know it's massive earnings, there's non-farm payrolls, and there's a lot to discuss. Let's get into it in our special weekend edition together. Stocks, commodities, and cryptos coming your way. Join us now. Well, welcome back everybody to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we'll be discussing everything from Tesla to the semiconductors, and of course, what's going on as the breadth in the market starts to decline. Is this part of a bigger problem that we've been noticing in dark pools? Remember to subscribe and smash that bell icon if you love markets like we do. But let's get into the first story today, which is of course the Bullish percent index. One of our favorite reads on the market. It's starting to turn from the 80 level down below 70. And we know that when we've seen reads like this, in fact, the last 10 of 11 reads, we've been in a small correction in the markets. Generally, somewhere between 3 and 7% has been the correction move. And of course, in many ways, we've already expected this for a few months. The idea that we rallied through August, we rallied September, that's fine. But generally speaking, coming into the election, we know that implied volatility is up. And that allows Wall Street at any point in the time to do a rug pull. And of course, what will they be doing next? Well, we know that the next 3 months should look pretty good. And we've got some stats and data from Wayne as well, which actually are pretty surprising when you start to look at the numbers. Now, we know that sentiment reports are coming through, and we've got what we call a neutral or balanced market. Now, there's a great chart here from Duality Research, which basically shows that the net difference between the bulls and the bears has almost gone back to neutral as markets have barely pulled back. And this is suggesting usually what we'd be already seeing is a more corrective path in markets. You'll notice by the time we get to neutral, usually markets have already sold off a little bit more. So there's a lot of games going on here. And of course, what it really is showing us is that people are worried about the US election. In fact, we did a sentiment survey recently, and we found that between 50 and 60% of respondents actually believed that the market was going to be too volatile and that they would have to therefore potentially change their investing style and wait until after the election. Now, this is what we call a wall of worry, and there's little doubt why we've been going up based on that. But now that we get closer and closer and closer to the election, could we still be seeing signs of weakness? Well, of course, we've been talking about this for about a week now. We have actually started to see signs through this, and we know that generally speaking, it's all about that first couple of weeks in November, and particularly the back end of October, where we start to see things like the Russell, the Dow, sometimes have that seasonal weakness. So just before we go through those data points, I want to talk about gold, because people are really surprised about how well gold's been doing this year. But on the channel, we've been loving it. In fact, it's one of our highest conviction trades of the year, along with utilities. And let's just say they have absolutely been smashing, beating most market indices, beating the S&P 500. And it still looks like gold is cheap on some metrics. But I thought it was important because generally speaking, when gold has done as well as it has done right now, in terms of stretching and moving to very heavy correlations, Jason Gotford has actually worked out that the next kind of year can be one of two ways, either very bad and kind of flat to down, or incredibly good. Now, it's in my opinion that we're still looking at a pretty good market in gold. And of course, this is where those metrics start to break down. The problem with gold is it's incredibly cyclical. So it has times of great performance and times of incredible underperformance. And we've just come off what many would argue is a lost decade for gold, which is why it's starting to come through so strongly as central banks around the world, such as Russia and China and even India, start to purchase. And of course, we've also seen ETFs starting to pick up a little bit in recent steam as the general public catches on to how good gold is in 2024. But then the next question is, will it continue through to 25? Well, it's been our opinion that we'll hit $3,000 an ounce sometime in 2025. And we've held that opinion since $1,800 or $1,700, $1,800 an ounce. But oil price is actually still kind of sideways. And what this is allowing gold to do, remember, is to move up. Now, one of my favorite reads on particularly gold stocks is gold stocks versus crude oil ratio. We'll look at that later in today's video, but what an amazing chart it is. And it really shows you, when you think about things logically, that there is a very good correlation between gold stocks and how cheap it is to run the machinery that actually does pull all of these precious metals out of the ground. And a lot of people don't really kind of take that into consideration, but you can actually chart it, which is awesome. S&P 500 to gold ratio also shows that there is a little bit of movement here potentially for gold, and we've seen this ratio go down to 1 many times over. So realistically, could gold go higher? Yes, it could, and at the moment, things are still looking pretty good if you're looking at a 3, 6, and even 12-month ratio. Now, another amount of questions. I've been reading your comments section, and basically everyone's asking a very similar question. What's going on with the 10-year Treasury yield? How is it going up? The Federal Reserve did a 50 basis point cut. I don't understand. Well, actually, this is a very easy trade for a lot of people. And of course, you've seen Druckenmiller recently and others come out claiming that they're going to be selling the Treasuries. To be honest, I think they've already been doing that for a while, and they're using us as extra liquidity, as the trade to me seems about over. But what this is it's a difference of expectations. The market had expected that everybody was going to cut at an extreme rate. Basically, the Federal Reserve was going to cut like we were going into a recession. Instead, what happened was we saw a 50 basis point cut, and the Fed dot plot looks like this, a step approach, which was very different from what the market was expecting. The market has now seen some good GDP data. Obviously, it looks like the earnings are kind of living up to expectations so far this earnings season, and that's bringing this line here more in line with the actual Fed dot plot. And that's basically allowing treasuries to obviously sell off to levels that are now looking a little bit more enticing, and we'll talk about those soon. So as we mentioned before, it looks like we've got basically retail traders starting to get spooked ahead of the US election, people starting to worry, and depending on the outcome, people are going to potentially freak out both ways. So why do we need to not do that during US elections? Well, as we've stated plenty of times before, whether it's a sweep or not even a sweep, over the next 3 months post an election, generally speaking, markets are up. Of course, are they up more if we see, let's say, the Senate owned by one party and, of course, the presidency owned by another? Yes. Generally, a locked kind of election creates a much easier algorithm for the AIs to be figuring out the future, and it creates more certainty about what's going to happen to policies over the next couple of years. But remember, it's not just that. This year, we bucked the September sell. And while we've used the September sell on this channel many, many times before everyone was talking about it, we kind of suspected this may have been the case this year. A little bit weaker in the beginning of September, but of course it held up by the end of the month. And we saw the big sell actually this year in August instead. Now, why that's important is because we know that when we've had reads like this, we have a 100% track record of being positive into the end of the year. And we also have pretty nice little pullbacks during that time, on average around 4%. Now, could that be the way we look at the end of this year? Well, according to Wayne, who always puts out some amazing data on X, you can go follow Wayne Whaley on X if you're interested, you can see here that according to him, the data is looking pretty solid into 2025. And in fact, in the modeled cases that he has, he believes that 24 of the last kind of 27 reads were actually bullish, and they were bullish pretty strongly to the point of around 3 to even upwards of 5%. And I think this is a very strong read when you're thinking about what's happening in markets right now. We also know that the NASDAQ composite has actually continued to do the same thing time and time again recently, which is that whenever we've seen a sell-off, we've usually had a buy up the next day. In fact, we haven't seen consecutive down days on the NASDAQ, which may be about to change, by the way, for 32 sessions. And in similar situations, it's shown that overall breadth and buying in the market is so positive that the next 6 and 12 months are very well aligned. And this again is lining up with what we believe into 2025. Maybe things start to improve, but then they start to get a little nasty after that. Now, if we're talking about what could be improving, we discussed in our last 2 videos that maybe it's time for this spread between the 500 and 600 stocks, that is kind of that little honey pit between the 500, 600 is maybe going to get a little bit better. Remember, there are quality stocks within the 500 to 600. The US is not just 500 stocks, it's much more than that. And in particular, this area could be where we're actually seeing growth stocks that are growing at extreme rates, but they're being underpriced. Everybody's buying S&P 500 and NASDAQ, and we're now at the 96th percentile between the valuations. Because everyone's been buying S&P 500, this difference here in the ratio is starting to get huge. And while I didn't have time to compile it for this weekend, we will be doing a special on that soon. And I would love you to subscribe so that we can all watch that together. Now, you can see here, when you look at the S&P 500 large caps, you look at the Mag 7s, and you look at the small caps and the mid caps, look at the difference here. It's huge. In fact, most of my trading career, which started in 2007, is being really a point where we haven't seen these types of discrepancies. In the post-COVID era, of course, that's where we have started to see it. But everything will eventually come back into line. Remember, the 96th percentile is no joke, and we've just started to hit those metrics. This also makes sense when we look at Jason Gopfert's work on IWM, when we have 5 straight losses in a row, but we're still generally holding above the 200-day moving average. That shows that, yes, there's weakness in this market right now, but whenever we've seen this, and we get quite a lot of reads of it, we've usually seen that the Russell has performed over the next year at a 2-to-1 drawdown ratio. So that basically means it's put on, an average around that 18%, and it's usually only lost around 9 in terms of maximum drawdown. I think this is important. Whenever you're looking at metrics, whenever you're looking at TA and price action and data, if you have an overall good broad reach of saying, you know what, it looks like these smaller caps could do well for the first time, then if you're getting a decent percentage ratio on that as well, hey, things are improving. So the S&P 500 versus the 1960s analog. We love, of course, this particular chart. And at the moment, we're kind of expecting that, yes, we could see a small correction or a little bit of a sell-off or a dip or a pullback at this period. Why? Well, it's fairly well correlated, and we've seen similar correlations in the past. So yes, it's the right time, but remember, it's probably not the time for the bigger one. We've kind of talked about the idea of a 10% pullback in 2025. And in fact, 2025 is going to be one of the most interesting markets and difficult to navigate. So make sure to subscribe to the channel, as we believe there's a lot of opportunities coming, but also some scary stuff that could be there during the year. Now, where are we into election day? Well, of course, we haven't been following the seasonality, but we have seen some pullbacks in markets. And in general, this is actually where the Russell tends to perform the worst. But as we've talked about, the Russell may be coming in to some strength into the end of the year, at least if we follow general election years. Somewhere around the 5th, 6th of November, we tend to see the Russell start to perform better. But this could be kind of showing us that people are starting to get very concerned into this US election year. And of course, that is also into earnings. 28% of overall stocks will be performing their earnings this week, but it's like no other. Remember, this is the week that has all of the big tech stocks in it. So if we have a look here, we've got things like PayPal, SoFi. The expected options moves are 11.2% on SoFi. And then we've got Google, we've got Chipotle, AMD, Visa, and then we've got Microsoft, Meta. Can you believe Meta is going to be a plus or minus 7.3% expected options move? And there are a lot of large moves. So I would suggest study this chart, know what you're in for, know what your percentage of stocks are. And of course, in terms of overall news, it's still a big week, because guess what we have? We have non-farm payrolls and the jobs numbers coming on Friday. So that's going to be a very important event. How many stocks are outperforming the S&P 500? Here's a great chart from Duality Research. It basically shows you that overall we have quite a lot of interesting stocks that are outperforming, and we can clearly see the sectors they're coming from. Now, you might not know this, but percentage of stocks outperforming the sector, have a look here in real estate and have a look at the different sectors that have been doing well. Now, can you believe these are actually the 2 best sectors of the year? I bet you didn't really think about that. But yes, financials and utilities, that's kind of suggesting, of course, that mid-late cycle concept of this particular bull run that we've got so far. Let's go to dark pool activity. We already talked about the Dow, the S&P. Obviously, we've discussed so many different sectors and indices getting these random transactions. Well, of course, we had a dark pool on the stock market last week, and then that's kind of led into a bit of a sell-off, a little bit of a correction starting to appear here, and weakness in the advanced decline. Tesla also getting some massive transactions on it. Huge one before, of course, the rally after the 10-10 event, and a huge one into the sell. Now, does this mean it's over? Well, as we know, with Tesla, it's a FOMO fest, so a lot of people jump on board. And at the moment, it could be that we're going to $303. We'll look at the options in just a moment. Let's move over to the semiconductors, another large trade. Are these bullish or bearish? We'll have to see how the price action acts. And Amazon is trading right around where we've seen a lot of transactions into this week's earnings. So just remember, there's a lot of big transactional flow that's been going on in these markets at this stage. Home builders continues to weaken. We expected this. Dark pools helped us to kind of find that. And we are starting to see some large trades. I don't know what's going on here, but basically the banking sector is seeing large trades just before the election. Could this be where the weakness is actually starting to appear along with home builders after amazing runs on the banks throughout 2024? We start to see that little bit of volatility. Let's move over to the sector rotation. Solar is now one of the better performers over the last 5 days after being horrendous. Are things changing? Is this some kind of weird election play? Hey, who knows? We'll see. Home builders down 7.38%. Materials down a lot. Gold stock down a lot. To be expected. They all ran very, very hard. But defensives are still sitting in the middle. So it's not really a defensive style sell-off. It's just more of a kind of market that is at this stage seeing a little bit of decline across the board. Here's the singles in terms of what happened. But I'm more interested in actually how the stocks traded. Because have a look here. We've got the advanced decline line on the S&P 500 dropping. Now, if you were watching our previous videos, we discussed the idea that 5840, 5850 would be where we'd bull back up to, and we would find a sell in here. Now, during our private streams, which we do each day of the week in terms of the opens and closes, links in the description down below if you're interested in joining us there, we actually talked about the idea of filling the gap on the upside and then potentially seeing a sell. Now, as the market always does, the market went a little bit higher. I'm sure a few people were getting scared at this point, but it sold into the end of the day and filled the gap on the downside. Actually, a fantastic day trade. But could we see further action to the downside? Let's have a look at the futures, and you can see here this big rejection wick coming through on the markets. Now, that's suggesting that there could be further weakness coming. And of course, if there is further weakness coming, which levels do we get to? 5,700, our long-standing kind of thought process here, or even 5620, 5640, a very interesting zone in terms of options flow as well. Well, ultimately, this is probably going to come down to options because we know that these zero DTEs are moving the markets right now. And let's have a look at the strikes. So 5770, 5780, which just so happens to be the wick lows of the current level, is where all of the puts, that's where all the puts are sitting for the Monday trade. Now, if we get underneath there, negative gamma takes over. Could we go to 5,700? Absolutely. That's the kind of cascade waterfall effect you'd be looking at. On the top end, 5850 remains the key kind of resistance, so that makes sense to the charts. And if we do get above the wick rejection of the daily, which we just saw close on Friday, I would say that will be very bullish for markets. So, of course, there is a bull and a bear case to be made, with I think the bears strengthening a little bit more over the last week due to the advanced decline line, the bullish percent index, and just in general, how we saw the NASDAQ trade as well. Let's move over to the Tuesday in options, and you'll notice here the put wall is sitting suddenly at 58 kind of 20. Now, this is kind of striking up to say that maybe the market will want to hold itself up. If it can't do so, you can really start to see how aggressive things could turn to the downside. Let's now take a look at CTA. It's been a little while since we mentioned these. CTA is still behind the market, but they have been buying so far into the dip, which I think is good for the next 3 months. And Brent CTAs are doing what we suspected. We've been talking about maybe oil having a little buy on it. It strengthened throughout the session. Maybe now, because of the news that came out over the weekend, maybe it's going to go a little bit more bonkers. But have a look at the CTAs. They're almost new high here, and they've been buying during the dip. So does that mean something? Sometimes it does. And of course, when it's with price action, that can be stronger. NVDA above 140 suggests the magnet of positive gamma towards 150. You can't really fight that at this stage. So that's just what the trend's doing. And Tesla is going ballistic. And as we know with Tesla, there is a strike that everyone will be looking at. That's going to be $300. 280 is the current strike for this week moving forward. We're sitting above 260. 3, which seems to be randomly the strike level that everyone has. But as we know, we're in positive gamma. It's a gamma squeeze, and markets can go ballistic like this. Let's go over to the bonds indications. It's not really seeming like bonds are worried about this particular market at this stage. Home builders obviously are selling, which is exactly what we suspected. The Wyckoff pattern up here, pushing towards 112. That could be a correlation we could use with markets if we do see further selling. Treasury is dropping down, has to be expected. Remember Druckenmiller and everybody else talking about Treasury shorts here. I don't really think that's the best idea anymore, but we are starting to come back in line with what the Federal Reserve's dot plot looks like, which is a positive sign if you're trying to pick up treasuries at cheaper rates, because that's around the right level. I don't think it's a trade, but some people like positioning those things, etc. Dollar index, as you can see here, we're at a resistance. So across the board, we're at a key level in terms of what's going on in the US dollar. And we know that this is an important level. And really, it's just coinciding with yields getting back up. Have a look at the 10-year, back at the resistance supply. This is exactly what you'd have to expect. Everything's coming back into harmony. It's not some kind of weird thing. In my opinion, it was just a difference between the market economists being completely wrong and the Federal Reserve saying, you know what, we kind of told you so. Now, we know that economists generally get it wrong, so that's to be expected. Let's move over to the copper kind of charts here. We know that copper has seen some buying. We need it above 4.4. If it does close there, we're going to 4.5, we feel, in terms of the technical analysis. So things starting to look a little bit better for copper, but it's touch and go there for the bulls. Gold stock, or gold in general, starting to find a bit more bullishness. As I mentioned, this would be where I would have saw some sellers. They didn't really push through very hard. I'm surprised that selling didn't continue on gold, actually. So it's still at that potential sell kind of sideways zone at this point. I don't think I'd be doing anything other than holding the gold. But I wanted to just bring up here gold stocks versus US oil for a moment and just show you guys the ratio here. So obviously gold stocks have been performing pretty well in recent times. They're pulling back a little bit now. But remember, most of 2024, we've been bullish these, all of it. And why? Because they're cheap. Well, they were cheap anyway. They're still better ratio. 0.8 seems to be a kind of good ratio for gold stocks to oil in terms of getting to the upper bounds. Just another example of looking at markets a little bit differently. Let's jump on over to silver, which has been in consolidation now for the last 2 sessions. We expect this to continue to be in some form of consolidation for a little while, and we're looking for the next turn towards the upside as we do expect silver to improve into the future. What about US oil itself? Finding some bulls, really good movement off that day trader swing zone down here, and it had a good Friday switch in it. Now, will it continue through the week into the economic uncertainty and the geopolitical tensions? It certainly could be on its way to 75 a barrel at this stage. Tesla, well, it's in a gamma squeeze. As we know, large transaction came through here, but that isn't going to necessarily stop the gamma squeeze for now. And are we going to 300 plus? Now, that's the question. 280 is the major first day trading level this week, and 300 is the second one. I don't think you should feel FOMO, as we all know how these Tesla moves go. They get into squeezes, they go ballistic, and then they tend to have extremely big lags afterwards. So it's usually a fast move with Tesla, and that's the way it goes. NVDA is more of the same. Really, this comes back to the rejection that happened near the end, but the trend is still up, so it's still in positive gamma, still trying to nail its way to 150, and HSI is still in sideways. So dark pool activity has shown us that someone is probably buying positions, but it doesn't look like they're probably trades at this time, at least at the point of this recording. The Dow is weak, and it has been weak for a little bit. We may find some buying pressure around this area here between 41.5, 42. If we don't, though, then we could go down to 40,500, which is pretty much the correction that would have us lining up somewhere around that 4,700 on the S&P. So certainly a key thing to look at. US 2K continues to find weakness. Again, no turnaround yet. It's our belief that the US 2K and smaller caps will do better over the next 3, 6, and maybe even 12 months. But at the same point, we always know that we had that breakout a week ago. We love a good false break when it comes to this market, and often there's a trap to be set. So we haven't seen a liquidity steal. I saw a few of you guys mentioning that in the comment section. I tend to agree. Usually the Russell loves to steal retail traders' money before going off in the correct direction. NASDAQ was probably the most interesting because it went to a new high, then rejected near the end of the session. Now, this is pretty important because it basically shows us that someone was selling into the close and getting that gap fill, and that suggests that Wall Street might have done a little bit of a trick on Friday where they rallied it up to dump into us retail traders. So maybe they're looking at selling a little bit further. First supports, you can see them on the screen now. basically somewhere around 19.7 for the first one and 19.4 for the second one, at least how we're looking at it. Ethereum is much weaker than the other major cryptos. Solana is better than Ethereum, but it's back down to a support. So you can see here the key support. No break of 2,800. When that happens, Ethereum will improve in our opinion, but Bitcoin's the big one here. Coming off the 20 daily moving average, coming off the anchored VWAP, our first major support continues to hold. The low held, which is most important, so we'll need to mark that out for this week. And really the neutral level for bulls is holding up as well. So this is really important. It does keep doing this. New high, that could be massive. It could push us to an all-time high. And at this stage, if this level gets taken, we've got to believe that the bears are going to pressure around 62.9. So some important levels coming up in the crypto markets. What about the news? Well, it's all about big tech this week, guys. Huge earnings. Subscribe to the channel. Make sure to follow us for those. We've got jobs numbers coming out, 8:30 a.m. New York time. That's going to be, of course, one of those big ones that can go off in one direction and then split to the other side. And remember to follow us on X for the latest updates for that. Links in the pinned comment. If you're also interested, check out our weekly newsletter. We've got some US election thoughts before and after coming, and of course, 7-day flash sale on some of our major courses. If you want to know more about cycles, how we predict things into the future in terms of overall investments, and how we kind of picked out utilities and gold this year, then you check that out. Otherwise, if you're interested in more replicatable, 40 reps, 50 reps, and just do the same thing, rinse and repeat, check out our day trading masterclass. You have a fantastic weekend, guys. I hope you're having a good time in the markets. And obviously, it looks like people are really concerned into this US election, and that's starting to have a kind of effect on the markets in terms of implied vol. We'll catch you in the next one. Bye for now.